Hey everyone, hopefully you're having a good day. My name's Andy, my channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what is going on today. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com, I dive into all this stuff, looking for potential investment opportunities, sharing it with everyone in the community. Platinum was one of our picks that has recently done very well. I do think most everything is about to take off, and I can show you some data for that, even in this update here of people sharing information on Twitter. So it's a good time to join if you'd like to join, in my opinion, to see what companies are good. You can take positions for this commodity bull market that we're in. And I think we're going to have a really good, I don't know, 5 years, 6 years, 10 years, whatever it takes for the rest of this bull market to play itself out. I think it's going to be very profitable. You can see the code in the lower left if you'd like to join. It's 50% off the first month on the monthly membership and a larger discount on the yearly membership. So what I've got here, I posted the uranium futures chart. It says, I have been bullish since 2020. Well, technically, you should have been bullish since 2016-17. If they say you're a perma bull for being bullish the whole time, tell them to stop being perma stupid. You should be bullish the entire time since 2016, 2017. It's been in a bull market the entire time. And what happens is you generally create a base. This could be a shoulder, head, shoulder that developed, broke out, and then you get a return move. What people will tell you is they'll say, well, this is bearish. This means that you're in a recession, so to speak, for uranium. And it's like, no, that's just a pullback, and pullbacks can be big in bull markets. We still have higher highs, we still have higher lows. That is a bull market. So I was getting a lot of crap in 2020, like 2021, 22, 23, for saying that we were in a super cycle for all of these different commodities. And that the beginning of the super cycle started for all of the commodities in 2020. And that was the bottom for oil. And I consider oil to be the master commodity. So that was what I was basing it off of, was oil price. And we went up, we pulled out of the consolidation in 2021. And that started the super cycle. To get the big picture right is the one who gets the big picture right is the one who makes all of the money. They're the ones that size up the really big moves, because you can look deeper than just the day-to-day, the month-to-month, and year-to-year moves. You can see what is developing and transpiring in the markets. You know what's cheap. You know what's expensive. You understand the cycle and the way to play the entire cycle. What are the rewards for playing the entire cycle? Why is it such a big deal to play the big move? Because you can't beat it doing short-term moves. It is impossible, in my opinion. The big long-term moves can net you 1,000 times your money on the upper end. And maybe on the lower end, if you don't choose a super aggressive company, you went completely conservative, you might only net 3, 4, 5, 6 times your money. Try to match that strategy by short-term trading. It is incredibly difficult. And if you choose specific companies that have a lot of leverage, I think it's very difficult to beat a buy and hold strategy in a bull market by trading all over the place. I don't think anyone has really done it successfully. So when I look at this, I entered in 2020, which was right here towards the end. I was lucky enough to identify that we were at a cheap commodity to stock ratio. I was watching it for years, years being 2018 is when I really started watching it, the commodity space. I was lucky enough to get in 2020 and swap out of technology in 2019. I swapped out of tech in 2019, bought a lot in 2020, specifically September, October. And I've been riding it ever since. I've sold nothing. And I've had a lot of people ask me, Andy, why don't you sell? Why don't you realize profits? Why don't you get off the boat? My answer is I'm going to sell it and buy what next? What other opportunity is there? Tell me what's better than commodities at this time. And I can't think of anything. There's nothing. Precious metals and commodities, in my opinion, are the best asymmetric opportunities in the market that I can find. And then I pile into, like 6, 7, 8, 9, 10 different ideas. When something's down, that's when I buy it. It's hard to time things in the short term. And yes, maybe you could have timed this a little bit, but even so, you don't know the full extent that that's going to pull back. So you're risking having to pay a bunch of tax or maybe gaining a little bit, if that. I think, you're going to have a 40% decline after paying taxes and all that other stuff to get the same amount of shares. So bullish on the right. I've been holding it ever since. Bearish on the left as this was coming down. Scrolling down to Tavi, and Tavi, he's releasing some stuff here. It's pretty good. He says, this thesis continues to develop and is likely still in its early stages. The premise is the following. When a country is the only one paying close to 5% of its GDP in interest expense, it can no longer claim to be the cleanest dirty shirt in the pile. That's precisely where the US dollar stands today, in my view. We're in the midst of a major downward shift in short-term interest rates, an effort to ease the government's growing debt burden. The trade-off of these policies is a meaningful devaluation of the dollar. And today, a new set of structural pressures has brought the US dollar to a critical juncture where it is about to crash. Every single time we get these big dollar moves lower, we've seen very strong tailwinds behind commodities, behind precious metals. Now, precious metals during this time frame, it was fully valued in 1980, 81. So I wouldn't have said that would have been a great spot to be because it was overvalued in 1980. But there are times where, like here, where gold was completely mispriced. It was the cheapest, one of the cheapest it's ever been in 2000 on a ratio perspective against financial assets. So what you want to do is you want to kind of add a couple of pieces of information together. It's not one chart that says everything. We're looking for a combination of charts that align where everything is cheap or everything is expensive. Right now, everything is expensive in terms of dollar. This is expensive up here. And in terms of financial assets. Financial assets were they were cheap in 1982. So this is 81. Oh, yeah, we did have a commodity bull market over here. Gold did not participate in it, but commodities did. Because this is 81. But financial assets are also expensive as the dollar is expensive. It's one of the alignments that I look for. Now, someone requested me, they say, do a chart for palladium. And I don't know, I did a chart, platinum to silver ratio. Maybe they wanted a palladium to silver ratio, but what I posted was a platinum to palladium ratio, stating that it's still better to play platinum than palladium. And it says platinum to palladium as requested. This is the buy palladium zone, and this is the buy platinum zone. And this is one of the ratios and some of the things that I share with the members on the website. And during this cycle, I think most everyone knows who's part of the community, I swapped my palladium for platinum down in April of 2020. I also did some gold for platinum in that same month, the same exact time. And this has been an outperformance of platinum against palladium. Now, we're at a 1.2 ratio, so I've tripled my money, basically. No, actually, 4 times. I've 4x'd my ounces, is what I'll say. It's a 4x of ounces if I were to convert platinum back to palladium, maybe a little bit less with a little bit of frictional cost. But platinum is still the buy here, in my opinion, versus palladium. But they could start to merge together. They are substitutable. And we could see it trade at a 1-to-1 relationship or somewhere thereabouts for a period of time. We may not. We may see this come all the way back up here. Now, if it comes all the way back up there, I'm going to be partying, dude. I am going to be ecstatic about that because then I can swap potentially my metal for something else and gain, it would be a 15x in my metals of palladium. So when I did my swap from here to here, it would be 15 times 1 ounce. So it's 15 ounces more. I swap 1 ounce and get 15 roughly back, 14, 15 ounces. That is incredible. And it doesn't matter. I don't carry any currency risk here. It goes up, it goes down. I don't really care. As long as the relationship of the platinum and palladium price in dollars holds relatively stable to other things that are made in society. And I think they go up versus things in society because they're scarce, and the demand for them continues to rise too. Tony said, I said this in the last Macro Dirt podcast. Gold is acting like dog crap, with the dollar getting ramrodded. At some point, when the dollar stops puking, gold is going to crater $500 an ounce. Timestamp me. Well, that's a pretty big call. But I don't think the dollar's going to go up. I'm in the camp that gold. I see you're making a short-term call here. I don't know if it's going to puke $500. Maybe it does. Maybe it does. Would I bet on it? No. Would I sell my gold? Well, I swapped it for platinum back in April of 2020, and I've held it, from that point forward. And my palladium. Was it the right call? I think so. But nobody knows exactly what the future is going to look like or the path. A lot of people think they know, but they don't. And that's kind of the best thing that you can do for yourself is figure out that people don't know what the future holds. But what you do know is that statistically, if you buy things that are drastically undervalued, that over time, that valuation generally reverts to the mean. So if you have a lot of data and you know where the mean is, and you are, let's say, an anomaly away from the mean, an anomaly means it's a one-off or two-off time in history where you're so cheap against the mean that everyone is so bearish that that's your opportunity. And then you don't have to create a time frame of when something has to occur in. All you can say is, well, the conditions that occur are X, that it does well under. Is X coming? And then you could say, yes, it's coming, but we don't know the exact moment. That's how you get rich, guys. It's not making these predictions. Oh, it's acting like dog crap. It's going to go down 500. These guys don't make money, a lot of them. I'm not saying Tony Greer specifically. I'm just saying in general, they may not make as much money as you think. Cube 2.0 says Trump has oil on the ropes. I'm not making a value judgment. I'm just saying the most market interventionist president ever. He hates oil prices. Uh, who will do anything to knock them lower? Has oil right where he wants it. Obviously, this will backfire medium long term. I don't think he has oil where he wants it. I think they are panicking. So, yes, he tweets and he says all these things, and he obviously has insider information because the tweets, they come out and then some action occurs after. He called the bottom when he had the 90-day delay. He released, before they released that information, he's like, it'd be really good to buy the stock market right now. Ha ha ha, you know what I mean? He did the same thing with oil. I wouldn't be long oil here. And then everybody got scared out of it and sold it off. The reason they're tweeting or doing that or trying to hold it down is because they don't want it to go up. And it was right at the breakout spot. They had to do something to contain oil from mooning. Oil's going to moon just like platinum is doing. It's going to do that. Now, the exact moment, I don't know. It's coming up. It'll do it. Just give it time. Platinum and oil trade very similarly to each other. They're both inflation-sensitive assets. So to have platinum go up and oil not follow it, I would be highly surprised if that were to exist for a long period of time. Tavi, another one. He's got the gold derivatives are on the move. Silver, copper, the miners. The US dollar is falling, and now platinum prices are surging. My mind is always trying to look ahead, and I can't ignore this chart. Platinum has historically shown a strong correlation with Brazilian equities. Not because Brazil has major platinum exposure, but because investors tend to climb the risk curve during secular bull markets in gold, gravitating toward assets like emerging markets and other metals. The recent breakout in platinum could be a sign that Brazilian equities are next in line, in his view. Suppressed yields and a weaker dollar are exactly the kind of backdrop that tend to ignite these moves in emerging markets. So what I think drives both of these metals, or the metal and EWZ, which is an ETF for Brazil, what drives both of them is a weaker dollar. And this currency exchange rate is going to drive EWZ. So we're going to see crazy stuff coming. It's all coming. We're right there at the beginning. Some of these are starting to pop off. We're going to start to see a whole bunch of crap here start to pop off. Do we know the firing order? No, I don't. I don't know the firing order. But when money starts to move around and shift in this vast sea of money printing that is going on, we're going to start to see money shift away from US dollar denominated assets at some point and go towards emerging markets, precious metals, and commodities. And the moves that will transpire in some of these equities are going to be epic. I mean epic, guys. And the ones who make the money, in my opinion, are the ones that can envision what is coming. They're not in the dark. They're not drawing trend lines, and then it just happens to break out, but they don't know where a good selling point is. It's about playing the entire cycle and knowing what drives what. What drives platinum higher? Is it the supply and demand balance? Yes, a little bit, and it's not the sole reason. It's inflationary environments that drive. It's a weaker dollar. It's the dollar getting weaker against other currencies as money rotates away from dollar-denominated assets to something else. Knowing what drives what is something that you can then, if you know what interconnects, and let's say it's like 16 pieces of the puzzle, right? What it can do is, if you understand a greater amount of the puzzle possesses certain characteristics for conditions that are coming, you can more accurately look and statistically position yourself for certain conditions that are coming. So like a couple of the pieces, let's say gold is breaking out and then platinum breaks out after. Those would be two of the pieces of the puzzle. And then you could look at ratios and how they react with each other, another piece of the puzzle. And then emerging markets, another piece of the puzzle. And then currencies, another piece of a puzzle. And you just start piecing it all together to see what the puzzle really says. Rock bottom entries. He says the DXY is breaking critical support. Commodities SUPERCYCLE. The likes of which we haven't seen since the early 2000s. So the last fractal that we had in that particular time, we started the bull market here. So let me get this bigger. We started it over here in 98, 99. We had a move higher, which then transpired into a slowdown in the market. The slowdown in the market was up here in 2001, but the dollar was really strong. So people ran into the dollar. We had a strengthening dollar in the beginning of that bull market. We had an initial surge in 98, 99 in a lot of different commodities. It went boom, it shot up as people bought it up when this was expensive. We had a slowdown, and then they lowered interest rates, and boom, huge move lower. There was a lowering of interest rates and a weakening of the dollar that caused a very big move in commodity markets. This was wave 3, and then this was wave 5. And then we had a big move with this double top over here in 2011. That's when precious metals peaked out after that move. The commodities all peaked here in 2008. And that's exactly what we've got going on. The cycle here is an up cycle, down cycle. Up cycle, the peak here was 2021, and now we're going to turn lower and head a lot lower for the dollar. This is the main driver of the commodity bull market. It's not supply demand with individual sectors. You're going to see all sectors go up. Money's going to rotate and plump, or it's going to move from financial assets and plump themselves right into the commodity precious metal complex. Just like it did here. It's all in alignment. Pennies used to be pure copper and huge. Now they're tiny, zinc, and basically worthless. That's what currency debasement looks like. In fact, our currency is going to become so worthless that we're going to have to shift to a central bank digital currency system, because creating copper pennies is going to become too expensive, or now zinc pennies. Jamie says, yes, it is, and silver will be the greatest of all time, says Jamie. So what I posted next, platinum to silver ratio. And I don't know if that means that if silver is going to be the GOAT, but check out platinum breaking out here. I think platinum is going to be the GOAT. And people don't even realize it. It was the silent bull that nobody realized, except for the members that are on the website, because we bought this whole corner down there. Bought the whole thing. All underneath $1,000 with the premium. A whole bunch of us we're going gangbusters on it. It's pretty fun. Pretty fun to be buying with a bunch of buddies on the Discord there. The Great Marti, gold. Beautiful ascending triangle in play. Downside either complete or nearly complete. A breach of the bottom trend line voids the pattern formation. Hope this helps. So we had Tony Greer up there. He's calling for if the dollar were to stop going down, we would see a $500 move lower in gold. At the same time, Great Marti is signaling a ascending wedge, which is a bullish formation since we entered it from the downside up, which could break to the upside. What is my opinion? I think we're breaking higher because I think the dollar is going lower. And that's what we're piecing the puzzle together for. We're piecing the lower dollar, and then the asset prices go up. Now, could I be wrong in the short term and this puke lower? It could, very well could. So the shorter term market movements are less statistically the percentages of being statistically right drop as the time goes shorter. So day traders all go broke. They all go broke. And then as you lengthen your time, your success rate goes up. So if you were to hold a company for 20 years and it's a solid company, your success rate goes up versus 4 years versus 1 year versus 6 months versus 1 month versus, days. The success rate goes up. So what you want to do if you want your success rate to be high is you buy things that are undervalued, that are cheap, that have good bottoming patterns, and then you're patient enough to have a longer time frame hold than everyone else. And that's how you maximize your percentages of being right and also your returns. Frankwave Freight Futures AM update. Dry bulk, Capesize, Panamax are both down 3% and 1% respectively. And tankers, VLCCs flat, and Suezmax is down 1%. I thought this was funny. It says, what would you do? It says, you know what I'd do with 37 trillion in debt? 2 wars at the same time. And that's from Office Space, the movie. Was it Office Space or No, it was Office Space. Yeah, Office Space, the movie. It was back in I think it was the mid 90s. I think mid to late 90s is when it was out. But that was a funny part of the movie. It really was. If you knew there would be hyperinflation in the next 5 years, what would be some assets you would buy for protection? Remember, we're in a 37 trillion in debt that will never be paid back. Well, I hate to say it, but unfunded liabilities are really a huge problem. They're in the $100 trillion of debt. I can't remember the exact amount. It's like 200 and something trillion, I think, if I can remember. So what would I do? I would do exactly what I'm doing. I created an entire YouTube channel on it. I think we're in an inflationary period. I think interest rates will go up. If they hold interest rates down, the dollar is going to get smoked. Smoked. And everything that's inflation sensitive is going to fly. So go back in history. There's some articles that you can look at that talk about what are inflation sensitive assets. And again, I'm not trying to push the website that much, but that's what we're in. And then I've shown you guys portfolios that are sample portfolios of previous bull markets and the strategies that we're deploying and how it works, the asymmetry and the positions. And even if we were to lose positions, what your potential returns would have been back then versus putting that strategy in today. JC Parrott says, do you know many oil gas stocks that look like this? Yeah, Chevron, ConocoPhillips, the big boys are all like that. The big boys lead. What they do is they break through resistance. There's a reason they're sitting on top of this, and they know inflation's coming. So people are positioning for an inflationary outcome. I think I know companies that are going to do incredibly well. Probably maybe even beat Imperial Oil. But this is a pretty good chart here. It looks pretty solid. But there are companies out there that I think will do insane things, like insane things coming up. Bullish term, target still intact for oil, $115 oil coming off this for the point and figure chart on the West Texas Intermediate crude. We got SILJ here. SILJ on the Renko chart. The $15, $20 level for silver junior miners ETF is a major neckline. When we get above that level, we trigger a measured move to 2250, and therefore also breaking the massive golden wedge. We've got the golden wedge, which is the launching pad, in my opinion. We've got a shoulder, head, shoulder. We're right at the neckline basically today. And when we punch through this thing, it pushes us into a projected area out above the bigger pattern. So it'll punch us through into the out of the bigger pattern. And then it's in the fly zone then. We're going to fly. And this is going to happen all across the board here, guys. We're going to see silver pop off, platinum pop off, and then oil's going to pop off. Maybe not in the order I'm saying. I'm just saying these things are all going to start popping off, and it's going to be ridiculous. Absolutely ridiculous. It'll be a lot of fun if you're partaking in these sectors. Brandon says, man, all you had to do was be long a metal used in ICE engines and soybean oil, and you've outperformed. There's a lesson here. And year-to-date performance, platinum's up 40%, soybean oil's up 30%, gold's up 25%, the VIX is up 25%, silver's up 21%. Now, who's really bad? Orange juice, cocoa, soybean meal, sugar, corn, all down. Now, can you look at this chart and figure out who's going to outperform the best in the future? No, you can't. What you want to do is you want to look at value, not price performance. Generally, price performance follows the best value eventually. Not every year, but eventually. So if you get into the most undervalued sectors, eventually you will outperform consistently over time. Joseph Brown says, so after significant studying and keeping the President or Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. And then Joe responds with, it only applies to assets held on an exchange, not in wallets. This isn't about innovation or financial freedom. It's about anti-privacy and control. They want to know what you have, where you have it, and maintain the ability to freeze and seize it. That's something to think about. Coming down to Uselink. This is platinum and oil. It says overlaying the charts can be very telling. Here we have platinum and oil, and it is clear that they track each other very closely. Platinum is absolutely sent it after the wedge breakout. I don't see a reason why oil will not follow. I'm in the same camp. Oil's going to follow here, guys. It's going to rip. You've got the consolidation, the breakout of the consolidation, breakout of the consolidation. It consolidated again, and here we are breaking out. And I think crude oil is going to do a big breakout at some point. Trump, I think, delayed that breakout for a little bit. I don't know how long, but probably not very long. Patrick Karam says, every cycle since 1970 has whispered the same sequence. Fed pivot, rate cutting cycle, recessions and jobless claims uptrend, gold versus the stock market uptrend. That's when commodities explode and outperform. Exactly. We're right there. We are right there coming where commodities explode and outperform. And that's all I've got for today, guys. We're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special that coupon code over there. And that's all I've got for today. So we'll catch you next time. This is Finding Value.